Coloring Crypto.
Welcome to Coloring Crypto. Today's episode is a special new format where we're going to record today and release today. So this is timely. We've got two of our audience's favorite guests from previous podcasts, Usman and Cousin Dave. All right, let's get into it. Let us know what you think about this new format. Oh, and one quick thing. I think I buried the lead. I asked the best question at the very end, so stay tuned. Or, just fast forward. But it's a good episode. In the last week, Bitcoin dropped from 11,000 down to where it's at today of 8,800. So they have some good explanations on what happened this last week. Listen for the end.
Hello.
Hey, Cousin Dave. How's it going?
Hey, Gabe. I'm doing pretty well. How about you?
Good, man. Looking forward to seeing you for Easter, hopefully in a couple of weeks.
Yeah.
Hey,
right.
Can you guys hear me?
Hi, Usman. How you doing?
Good. How are you?
Good. So we've got Cousin Dave in the line from episode, I think 8 and 14, and then Usman, one of the earliest episodes, episode 5. So I'm really excited to hear what you guys have been up to since then, and share with you all that I've learned since we've last talked. But Usman, how you been doing? I know you've been traveling a lot.
Yeah, I'm doing great. Been really busy, traveling a lot, lots of investor meetings. I was recently in Dubai. Obviously, Dubai has those ultra high net worth individuals. But yeah, it was very interesting. Dubai, they're very progressive on blockchain technology, and the UAE in general, they're starting to incorporate a lot of blockchain stuff.
Let's get into that a little bit later. And Cousin Dave, how you been the last couple weeks?
I've been good.
Just to kind of introduce this episode. So this is our first effort to release today. So we're recording this on Friday. It's noon on Friday, and this episode should go out this afternoon. And the idea is to kind of have a more timely, address of what's actually happening, because the whole, cryptocurrency space is so volatile.
I like how Gabe refers to Dave as Cousin Dave, not just Dave.
I mean, we're kind of modeling off of, I don't know if you guys listen to the Bill Simmons podcast, but that's one I've listened to forever. And he's got Cousin Sal that comes on consistently. And I'm like, I got Cousin Dave.
Gotcha.
But let's start with this, man. I mean, if I go to coinmarketcap.com right now, Bitcoin is at $8,800, and it's down 7% the last day. And I know both of you guys, you've always kind of said you're long term with Bitcoin, but I mean, what did you guys do in January when it was really, it went went up to almost 20K and then back, down to, I don't know what the low was, like 6 or 7K. But what did you guys do? How'd you feel, and did you guys hold, buy, sell? What was going on for you?
For me, I just held. I don't have plans to sell, and particularly when crypto drops, that's really when I don't want to be selling. So maybe I'll end up to be a big bag holder. But so far that strategy's worked out pretty well.
Did you end up buying on the dips at all?
No, for me, I have a substantial portion of my net worth is in crypto, and so it really doesn't make sense for me to acquire anymore.
Yeah. What about you, Usman?
So for me, we as a fund, we kind of anticipated the January crash with the Chinese New Year approaching, and the historical last 4 years, January has been kind of a bear month. So we had capital on the side, and so we did buy into the dip, but our previous assets we did not liquidate, so we're still holding, and personally I'm still holding as well. And currently right now, I mean, then we had another dip back in first week of February, which is pretty analogous to the first week of March here, where the market just dipped in the past few days. So I think it's a good, these are good buying opportunities, and I'm also going to buy. I believe this short-term bear market that we had these past few days, I was just looking at the charts last night, and I was trying to find the bottom for Bitcoin and Ethereum, and I think that over the weekend we'll still see it to continue to be low before maybe the market will rally on Monday. So this weekend I'll probably make some trades. And it's interesting because everyone's been pretty quiet the last couple of months since January because of the bear market. And I think what happened was a lot of people during the bull run, they bought into the hype, just regular, not really the big investors, but like your average Joe investor who signs up on Coinbase and everything. And so they bought a lot. They bought a lot of crypto in the bull run, and then when the bear market came around, when it was good to buy low, they didn't have any fiat in reserves or savings to actually buy more. So
Right. They're
that's what
all.
I noticed.
Yeah, I mean, I remember like back, I think around the time we all first spoke around like Thanksgiving, there was this whole theory of like it went way up after Thanksgiving because all the people had gone home to their family members and told them to buy Bitcoin.
Yeah, yeah, that's true.
Didn't happen for Christmas though. So, Dave, I want to put you on the spot for just a minute in a lighthearted way. We had you give us some predictions for this year. And it's still early. It's still not even end of the first quarter of the year. But one of the things you said, I think, was you saw Bitcoin going to like 50K. But you also said something interesting about a prediction of a collapse of altcoins. Like, what's your guys' take on like what's been happening with the relationship of prices of the big players, Bitcoin in particular, and then all these altcoins, and there's still we're working with more and more ICOs. So it's still, they're still coming. What's in that context, what's your sense of altcoins?
So I think a lot of people got into Bitcoin because they want to be rich, but they recognize that like, Bitcoin went from like a fraction of a cent to whatever it's at now, 8,800, and they want to see what's the next thing that's going to do that because maybe they don't have a lot of money, so they want to find the next thing they can put a couple $100 into and be rich as fast as possible. And I think a lot of these people are in a bad spot, and they saw their nephew make some money, or they saw, their friend make some money or something in Bitcoin, and they just want to hop on the next thing.
Yeah.
And I think, and last year, those ICOs did so well. And I think it's hard to resist that temptation. If you're working a job that you hate and you see your high school buddy who puts some money in, and then all of a sudden, he's buying a car, or he's, quitting his job or whatever because he took a risk and it paid off. I think a lot of people really felt that and put their money in. And I think, unfortunately, a lot of people don't have a lot of investment experience where crypto is their first time, buying a stock. Maybe they had a 401k or something that was managed through their employer. But some people, didn't even have anything, and just this is their first exposure to purchasing investments. And I think that led to a lot of problems with the ICOs in terms of valuations, where companies were raising a lot of money at really high valuations, and it's hard for them to deliver on those. If you put into a company and they raise $250 million and you need to get like 10x, I don't know. I guess it gets kind of complicated, but essentially, the valuations were too high. People were paying too much for what they were getting, and additionally, there are problems with ICOs because they're not even equities, and so there's a whole lot of problems from that. But it's kind of it's complicated, and people don't know these things, and so I think. It was almost a foregone conclusion that there's going to be a huge crash in altcoins. It's just unfortunate that some people got hurt there.
Piggybacking off what Dave said, I'm not sure. I think Bitcoin. Dave, you were saying that altcoins will be not as savvy of an investment versus Bitcoin, Ethereum, or Litecoin?
I think that as the ICOs have went on, it's like I think Ethereum was probably the first ICO. They raised like $30 million or something like that. If they would have raised last year, they probably would have raised, I don't know, 250 million or 500 million or something like that. And and essentially like the higher that people raise, then the more risk the investors are taking on, if that makes sense. And so I think as time has went on, ICOs have gotten to be a worse and worse deal, where it's higher risk and so
Okay.
lower expected value.
All right, so I would agree with that. So I want to split up ICOs and altcoins, even though they're kind of like they're pretty much the same. But as your comments on ICOs, I agree. The regulatory standards that are coming out right now are definitely hampering the exponential growth for ICOs. And 2017 was the year of ICOs, right? So you had people just buying into all these tokens, and immediately the price would just spike up, and a lot of hype and pump and dump and everything. And now it's a lot different, because now you can't even according to the SEC laws, you can't an ICO company can't disclose what exchanges they're about to be listed on. So it kind of they're kind of getting into that insider trading thing. They don't want that to happen, which in 2017 all the ICOs were saying, yeah, we're about to be listed on this exchange, and then everyone rallied to that exchange and the price went up really high, and then you had all the pump and dump schemes going on. As far as altcoins, now I want to make a little distinction. Post ICO coins, like things like Power Ledger, Neo, ZRX, Omise Go, and a lot of other altcoins that are post ICO, and they've been around for a relatively longer period than just tokens that are just launching. I think those altcoins are here to stay, and they might actually be the ones that could provide the high returns. For example, things like Power Ledger. If you look at that, I mean, that could be something where 3 years from now, when a lot of once they go past Australia and start working with a lot of power companies and utility companies around the world, then that could be a token that could give you, the returns that Ant shares went to Neo. So right now, I know everything is down right now, but the average power price was hovering around 50% for like a month, and you could see that going up to $5 to $10 in a year or two, probably within 2 years. And so if you got in when it was 50 cents, that's a good, if it goes to $10, then that's a good 20x return. So it really depends. If you put in 100K in that, then 20x that, it's a pretty good return. As far as the second part of your question, which was were you asking Gabe on Bitcoin? Where do we see Bitcoin going?
Yeah, I mean, kind of like what Dave had said at the beginning of the year, where he was saying he was very bullish on Bitcoin, but saying like this prediction of altcoins would just be collapsing.
What I think with Bitcoin is there's been I've been reading a lot of disparity between the mass public on, is Bitcoin going to be scalable even after the Lightning Network, and will people continue to choose Bitcoin? And I think that right now, from what I have experienced, institutional investors are still very big in Bitcoin. There's tons of mining operations still mining Bitcoin. And with the limited supply of Bitcoin, I think Bitcoin still will be here to stay as a store of value. But perhaps there will be another cryptocurrency that comes out that is better. I mean, there are some that are already out that are better for transactional purposes, but I don't know. We'll see with the Lightning Network if that solves a lot of the transactional speeds and also the fees. But a lot of people are still into Bitcoin, and they're still using Bitcoin. And then as far as Ethereum, I think is definitely here to stay, just because of its utility. And a lot of people I actually send Ethereum to people to pay for stuff now too. Huh. And then Litecoin, Litecoin as well. I pay people on Litecoin for goods and services. And so, yeah, I think those three are here to stay.
And you mentioned, I mean, like just the SEC is really starting to heat up and kind of go after people. We're getting, maybe like a half dozen requests from ICOs that we've been working with, to work with them, and we're still finding, like, people are still putting in their white papers, off the bat, like statements that are saying things like, this is going to go up in value, and we're like, that's the easiest red flag. You cannot put that in there.
Yeah.
Yeah, it's been kind of hot and heavy the last month or two with the SEC cracking down.
It is. It's very interesting, and I've been reading all the SEC staff letters that the head of the division is giving the Division of Enforcement, and I mean, think about it this way: the IRS considers crypto as property, the SEC as security, FinCEN as money, CFTC as commodities. They need to, build a new asset class for all of these. For crypto in general, a brand new asset class, because they're trying to, all these different regulatory divisions are trying to classify it as different things, and there's no unanimous decision on it, and so that disparity is causing quite a lot of problems. And reading all these SEC letters, and I'm actually talking to the SEC myself to get more insight into what they plan to do in the future and how the regulation will affect not just ICOs, but also crypto funds and custodianships and a lot of different aspects of anything related to crypto. So I think the best thing to do would be if all these regulatory bodies just created a brand new asset class for crypto, although I think that might be unlikely at this point in time, but
at least anytime soon, I think. I mean, have you had that conversation at all with the SEC to get a sense of, like, if they're keen on doing that?
So I have a call scheduled with the SEC, and so I'm talking to someone there, and I'm gonna bring up these questions with them and see what they say. Right now, I don't know.
Yeah.
All I know is for ICOs, they're actually issuing subpoenas. For crypto funds, they're more actually looking into, are they following the proper practices? Are they legally structured correctly, et cetera, et cetera. So they're not really they're not issuing subpoenas. I think for crypto funds in general, they're just inquiring. But for ICOs, because they're raising a lot more money and they have a lot more investors rather than just a traditional crypto fund or a hedge fund. They're going more after the ICOs right now, and then maybe they might ramp up more on crypto funds in general. But the problem with the funds is they don't know how custodianship is an issue, because traditional hedge funds, they work with an auditing company, a fund administrator, and a financial custodian, right? And most custodians in the traditional asset world for securities like stocks, they use banks or prime brokerages. But for crypto, what custodians, there's a few custodians out there that handle Bitcoin and Ethereum, and that's basically it. And the SEC, when I read their staff letter, their main question was, is there even any custodian that handles altcoins? I don't think so. I don't think there is. And what are the rules around that? And
I mean, wouldn't that be like the more decentralized it truly was, there'd be nobody as a custodian?
Exactly.
Yeah.
And I was talking to a friend about this, and we were saying, because cryptocurrency in general and blockchain technology is behind the premise of decentralization, we own our own private keys, so we're technically our own custodians. So how do you implement the law with that? If you own your own private key, you own your funds. You don't need a bank for that. You are your own bank. So in that way, is everyone their own custodian? How does that work out? And those are the type of questions that they're working on, and I hope to ask people in the SEC and different attorneys to see how that's going to play out in the future.
Cousin Dave, as a self-proclaimed libertarian, what's your thought on regulation?
Oh my gosh, Gabe, you know it, man. I think the whole thing's sad. I think I think a lot of the problems we saw last year that I talked about, and I forgot Usman, pointed out. I forgot all these ICOs. They got really good at generating fear of missing out. Using these things. We're going to be listed on this exchange. You're going to make this money. So they got really good at getting investors whipped up about getting that getting the greed in their eyes, the dollar signs in their eyes, and putting their money in. And I think a lot of the problem is because we decided in America, I think it was maybe in 1933 or something like that, that we're going to have accredited investors that could invest in risky securities, we'll call it, and that precluded the majority of Americans from participating in some of the highest returning assets, investing in brand new companies, and only let the rich people do it. And so then, people last year, like I went to high school with, nobody in their family has ever invested in anything. They've never invested in anything. And now all of a sudden they have these opportunities, to invest in, an ICO, an altcoin, Bitcoin, and they don't have any, way to make a decision around that. And I think a lot of that is because of the regulation, because the regulators said, most Americans aren't going to do that because some people are going to get hurt. But what I think happened is a lot of people got hurt. Millions of people got hurt, and they couldn't participate in some of the biggest upsides. Like Microsoft, getting Microsoft stock before they went public, or Airbnb stock before they went public, or Facebook stock before they went public. Only rich people could do that. And I think that's really unfortunate. It's really sad. And I think anybody going to jail or getting fined over this stuff is really sad. I think people like Usman spending their time, talking to the SEC, complying with these regulations. I think there's probably overall very little value add, probably actually negative value added. So there's all this human effort expended on this, and I think it provides negative value. And I think it's also sad that in the U.S. this is happening, and it's really pushing people offshore. I talk to a lot of people. They want to invest in ICOs, and they're trying to figure out, how do they get a VPN? How do they get a citizenship in a different country so they can participate in ICOs that Americans are banned from?
Right.
And so they're trying to route around the regulations. And what if San Francisco would have said, hey, this internet thing, it's dangerous. If they would have said this in 1990, 1989, 1995, something like that, there's going to be child porn. There's going to be people getting abducted. We're just going to ban the internet, no internet, or you have to have some license that costs, $100,000 to do an internet company. All the great internet companies would have just left San Francisco or left the U.S. and been built somewhere else. And I think that's what's going to happen here in the crypto space, which I think will overtake the traditional finance space, like we've seen the internet do in the communications and media space.
What are some of the best innovations that you guys have seen out there, or just new product ideas, or new kind of like partnerships that you're seeing in this space that you think are pretty cool?
Actually, before we go on that, I wanted to comment on what Dave said.
Cool.
What do you mean by the negative value add?
The negative value add. So people might say like, oh, hey, there's all these people, like they might find somebody last year who, mortgaged their house, there was somebody who put in $500,000 into BitConnect that he borrowed. And I think there's a lawsuit against the BitConnect people that he's part of. So he lost, I think, his entire net worth, or more than his entire net worth, by investing in BitConnect. And that's really sad, if he lost his house, if he, I don't know, can't afford a car or whatever happened to him because he put all that money in there. But if you look at the market cap of all the coins right now on CoinMarketCap, there's $360 billion in value. So people that have invested in crypto on the whole are $360 billion richer. And so I think that's a positive thing, even though some people are getting hurt. And so I think the more regulations we have, the more people are going to be precluded from participating, in this industry, the more money that's going to be spent on regulatory compliance instead of on product development and innovation. And I think that's a negative for humanity.
Gotcha. Yeah, that makes sense. I thought you meant negative value added for me talking to the SEC and trying to find out how we can help them.
Oh no, I feel bad for you. I feel bad for you that you spend your day doing that. And for me and my fund, I don't know. I probably spend 95% of my time, reading legal docs and legal compliance. Instead of doing anything that I think actually provides value to our investors.
Hey, that's my life too. Legal is taking over, and I really hate dealing with legal papers and stuff like that.
I mean,
Yeah.
there are a lot of folks that we talk to, like guests we've had, like Jackson Palmer with Dogecoin and Miko Matsumura, who's like an advisor for lots of different ICOs, and Miko's on like all over Facebook on like this mission to find ICOs that are improperly listing their advisors. He's finding himself listed as an
Oh
advisor
yeah.
for companies he's never talked to, and he's reporting people to the SEC. And both those guys are kind of like, regulation is good. We need it to get a lot of these scams out of there. But I mean, on the flip side, like you're saying, it's like you guys are stuck in like a legal morass.
Yeah, I mean, it's inevitable, right? And I think it's a good thing, but I think they're also being progressive about it. They're not like trying to throw people in jail unless they've committed actual fraud or fraudulent activities. They just want to make sure the investors are protected, which I agree with. And it's kind of like, with Trump when he was elected, he wanted to reach out to a lot of the big tech guys, like Tim Cook, Elon Musk, and initially they turned it down, but then they realized the only way to help America, from a political standpoint and to like technological standpoint, is to advise the president on what is the right way to go in. So, we're kind of in that same space where us as innovators, like Dave was saying, we spent a lot of our recent time into all this legal stuff when we could be doing a lot more important stuff, innovating in the technology. I think it kind of is a little bit of our responsibility to help out these regulators, inform them how everything works, because they probably don't understand blockchain and crypto as well as people in the industry do, and so they're looking for people to help them out in any way that they can. I'd like to do that. I like to be able to tell them, like, if I talk to someone at the SEC, be like, how can we help make your lives easier as well as our lives easier? So let's build a mutually beneficial partnership where it doesn't hinder the progress for innovation, but also keeps investors protected and keeps all the scammers away.
I think there's a fairy tale that's told where it's like, oh, if you have regulation, it's gonna protect people, and I'm sure it does to some degree, but I think on the large part it doesn't. If you Google $1 billion scams, you're going to see a bunch of scams in the regulated space. Nigerian scams are illegal, where you have those princes that email you and say, oh, send me $10 or $1,000 or whatever, and I'm going to send you $10 million. Bernie Madoff. That was a huge, was it $64 billion scam or something that was pointed out to the SEC in I think 2003 or something like that. Maybe even earlier, maybe 1999, and didn't actually get uncovered until the market collapsed in '09, I think. The Wolf on Wall Street. So I think if you offer people the choice, like, oh, what if we have this regulatory body and it costs X per year or reduces innovation by Y, but it eliminates fraud and scams, and there's no more bad scams in the world. That's one choice, or that's one thing. But we don't actually have that. There's still going to be scams that happen, regardless of the regulations. And then you have the additional, innovators who, are either worried about the regulations so they don't comply, or it's too expensive to comply, or they just, get tired of it and quit.
Right.
So I think there's a lot of downside, and I don't see the upside. I know in America we're always talking about income inequality. But really, I think the important thing is wealth inequality, and how are you going to have somebody go from being maybe a minimum wage earner or something like that, and have them get into the upper class when they're talking about getting their minimum wage increased by $2 an hour or $7 an hour or whatever. What if instead we talked about, how do they get into, into investments where they can, get 1,000x return on their investment or something like that.
Yes.
I think that's game changing. And I think, the increase in the minimum wage is not so interesting in terms of, closing that wealth inequality.
Right. No, I agree with you. Yeah, I see what you mean. I guess there's a little two sides of the coin. I mean, it's good that, Wyoming recently had that law where they're being more lenient on crypto. And then also, I think Illinois just recently came out with where you could pay your taxes in crypto as well. So that's what I mean when I say we want to work with regulators. Not me personally, but the general public should work with regulators to inform them that crypto is here to stay, blockchain is here to stay, and the best thing all these regulators can do is educate themselves with the people who know the technology best, and then that way people won't, as you mentioned, the people are leaving the country. That way, people will stay in America and continue to contribute to America. And if they fail to do that, then people will start leaving the country. And I know quite a few friends that are already considering that as well, especially in Puerto Rico. So, yeah, definitely.
Yeah, I mean, Puerto Rico, there's that whole Brock Pierce sort of like crypto community that's all moving down there. I guess somehow the tax laws are better in Puerto Rico or something. I don't know. Do you guys understand why it's so attractive or more attractive?
Yeah, one of my advisors for the fund is actually a Puerto Rican resident. So there's two acts, Act 21 and Act 22, and based on what you file, if you live in Puerto Rico, I think 183 days out of the year, you qualify for only 4% income tax. And for businesses, I forget which act it is, but for businesses, as long as you have either 2 or 3 employees, you qualify for those same tax exemptions. And so that's why a lot of the crypto people like Brock Pierce have gone down there into Puerto Rico. And also, I mean, I love Puerto Rico. I was, the first time I ever learned to surf was in Puerto Rico back in 2014.
They've got good surf in Puerto Rico?
Yes. And
Gabe, now you're going, huh?
So San Juan, the capital, it's not that great, but northwest Puerto Rico, especially Rincon, which is where my fund advisor lives, he in that area, northwest Puerto Rico, they actually, because of the nor'easter storm that came on the East Coast, they're seeing 16 to 20 foot swells, which is very crazy because that only happens once every few years, maybe once in a decade, 25 foot swells, which is massive.
All right. So a week ago today, last Friday, the price of Bitcoin was $11,000. Today it's $8,800. What happened this last week?
Well, we know what happened. Dave, you can go ahead. You know what happened?
I kind of forget. There was some kind of regulatory thing earlier in the week, and then I think one of the Mt. Gox trustee dumped $400 million of coins on an exchange or something like that.
Yeah, which, exactly.
I haven't looked into too much past the headline, but that seems pretty insane.
So what happened was the Mt. Gox trustees, they liquidated a lot of their Bitcoin between January to February, and I think February was the biggest dump that they had. Don't quote me on this. I think it might have been 8,000 Bitcoin sometime in February, and they didn't do it over the counter. They did it all on the exchanges, which caused a dip in the market. And then you had the Binance. I wouldn't call it a fiasco because CZ, I forget. I follow him on Twitter. The Binance CEO, I forget his full name. I just call him CZ. But he addressed it very well. apparently there were bots that were that were getting access based on people's accounts that were being phished. So it was like a phishing scam. But what happened was the Binance CEO, he's done a phenomenal job with Binance. And what happened was the bots were trying to do all these trades with the API keys to hack the system, but it ended up backfiring. And the hackers actually lost their money, and all the funds for the actual people who use Binance were all intact. So what happened was, because the news came out in a negative light, because people didn't understand it at what exactly happened. I think there was a bit of FUD that went around, and that caused a little bit of price tagging. And people were like, "Oh, did all my funds get lost in Binance?" Which is not the case, because as the CEO pointed out on Twitter, all their funds are intact. And so because of that kind of caused a little FUD. And then with the trustee liquidating his Bitcoin assets, those two things kind of attributed to the crash that we're seeing right now.
That's interesting. I mean, it's almost like the perception of Binance as opposed to what actually happened contributed to people's FUD.
Yeah, exactly. And
yeah.
I mean, most people who are investing, and we commented this earlier in the talk, are, the average Joes that just got in the bull run, and they're not seasoned investors. They don't. And Dave mentioned on this very well. Crypto might be their first investment that they've ever made, and if that's your very first investment, crypto is a difficult market because A, it's very technologically heavy, B, it's very volatile, and so with the combination of those two things, if you don't know what you're doing, you can lose a lot of money, and people are just caught with the allure of getting rich really quick, and they don't understand that security for your assets is very big. There's a lot of technological understanding behind these tokens that you have to understand, and this is not something like where you invest in an IRA or a mutual fund or a savings account. This is you're trading on a market that is 24/7 worldwide,
right?
And so that adds its own level of intricacy. So that's why a lot of people, the weak hands and the FUD, they sell off a lot of their stuff. But people like me and Dave, we're long-term holders, and we'll weather out the storm, and we'll buy the dips. That's our philosophy.
Yeah, I think that's well said. One of my friends just asked me today, should I buy a Bitcoin? And it's like, well, that's hard to answer. And like Usman said, if they buy Bitcoin and they just bought it to make some money, and they buy in at 20K and it goes down to 6K, are they gonna hold through when they, like he said, don't understand the technology? It's complicated. They wanted to get rich, and they lost I don't know, whatever that is, 2/3 of their money.
Yeah.
I think it's really tough.
I definitely told a few friends when Bitcoin was like in early January, like in 16K. I was like, you guys got to get in this.
I did. I got for some at 16K.
I feel like I might have buried the lead. Maybe I should have led with what happened the last week for our listeners, but this would be a good teaser to make them stay to the end of the podcast. In closing this out, any things you guys are really paying attention to for the next week or two or next month?
Go ahead, Dave. You can.
Oh yeah, I'm not too short term. I'm interested in things like Ethereum proof of stake. Usman might have more on this. I think it's Dash. One of the altcoins has a different governance model where the holders of the coin get to vote on the roadmap, I believe. I think it might be Dash.
It might be Dash. I don't follow Dash that closely, but I know what you're talking about. Yeah.
So there was this big contentious split, in the Bitcoin community. I don't know if it was a big contentious split, but there was definitely a contentious split in the Ethereum community that resulted in these forks. And so with this coin, it seems like theoretically there would not be a split, and it's almost like a democracy where the people with the most coin get the most say. Maybe not like a democracy, I don't know. But anyways, they get to vote on the direction of the coin, and I think that's interesting. There's a hash graph technology that I haven't looked into too much. There's a lot of work on the scaling. That's Ethereum's number one focus right now is around scaling to be able to handle tons of transactions. The Lightning Network with Bitcoin is pretty interesting. Like Usman said, I think that's what's going to take Bitcoin a lot higher once it starts being fast and free again, as people implement this Lightning Network, especially if somebody like Coinbase does it. So those are the things that I'm kind of paying attention to, but none of them are going to happen, in the next week or two. Those are months to maybe year plays, but those are the things that are going to be really important, in moving the industry forward.
Hey, you mentioned Hashgraph. We actually did a podcast with them a couple episodes ago. And God, I was like, I'm just getting a handle on blockchain, and now you've got this other distributed ledger technology. But yeah, lots of innovation in the space for sure.
Yeah, Hashgraph. It's interesting. Their data structure and consensus algorithm is supposedly faster and more secure than the blockchain. So it's going to be interesting. And like Dave said, there's a lot of disparity between the Bitcoin community on how to proceed in the future. And I'm hoping the Lightning Network will kind of like quell a little bit of that disparity short term. Because I'm still a believer in Bitcoin long term. I still think that it's a good store of value, and it'll be around for a while. And and that's just not me personally speaking, from a bias standpoint, but also the institutional investor I've talked to, and these are people who want to invest 5-10 million or more. They want to invest in Bitcoin and Ethereum, and that being said, that means that these people, like big venture capital firms and the family offices and institutional investors, if they want to get into Bitcoin, as a store of value and I think they were saying, when I was talking to some people, I can't give out too many details, but when I was talking to some people, it was they wanted to, they had a 5 to 9 year lifespan where they wanted to hold on to these assets in custody. So
right.
That being said, that kind of is a good indicator that these big institutional investors are very interested in. They're on the sidelines right now, and they're now starting to kind of probe people about how can we get into this market, and they're starting to see that blockchain itself, the technology, is here to stay. People, you can't argue that fact. At least this crypto revolution is here to stay.
Right on. Well, thank you, Usman. Thank you, cousin David, and listeners to Coloring Crypto. Thanks for tuning in, and let us know what you think of our new idea for a format here of these flash roundtables. Let us know what questions we should be asking if you like this idea. And a quick plug: we've already released 2 episodes on the story of Dogecoin, and we're really interested in Dogecoin because it's this super outlier, made as a kind of a satire that has succeeded in terms of market cap, as a top 40 coin. And I've been learning. We have an episode releasing with the developer or a member of the current core dev team. Do you guys have any take on Dogecoin?
I have a very interesting perspective on Dogecoin. In 2013, I was mining Dogecoin. I had at the time several million Dogecoins, and I ended up liquidating them all towards Bitcoin. But as far as that's as far as my Dogecoin interest goes. I haven't really looked back into it. I know it's climbed up the ranks. I don't know why and how, but I haven't really looked into it that much. But all I can say is I used to mine Dogecoin in the dorms for electricity and had quite a lot. And at that time we were just doing it because it was just so easy to mine because it just came out, and the mining back then, the difficulty was super low. So we were just generating millions of Dogecoin. And it was just a novelty for us. We never thought that now, 4 years later, 5 years later, that it would be in, the top 50 on market cap.
It's funny when you were back there mining and getting millions of Dogecoin. The creator Jackson, he had some really small processor. He couldn't even mine them himself.
Yeah, I mean, we had a GPU rig with high-end cards, so that's why. But yeah, definitely. That's all I can say about Dogecoin.
Right on.
For me, Dogecoin was interesting. Back, I think it launched it maybe in December of 2013 or November, somewhere around there.
Yeah.
And man, I was such a snob. I was all into Bitcoin, and I thought, what this thing is such a joke. All these people are just fooling around. This thing is so silly. And the market cap just kept climbing and kept climbing. And then maybe it was like, I don't know, January or February of 2014, I think Dogecoin had hit 90 million, which back then was like, a big deal. Today, some of these ICOs were 90 million. But back then, 90 million was huge. And I started looking into Dogecoin a little bit more, into their Reddit and their community. And they were having such a good time. It's like the Bitcoin Reddit is like a bunch of people talking about Austrian economics and technical stuff, programming, and so it's like almost like a library. And then Dogecoin, that community is like this party. Like, in the Reddit, they're all flinging around. They're sending each other, I don't know, like 10,000 Doge or 100,000 Doge or who knows what. You just hop in there and you say, hey, what's up? I'm Gabe. I like to surf. And they're like, oh, hey, have some Doge. They had this party in I think it was a Canadian subway or airport or something. I don't know. I think some guy's in like a yellow dog suit or something, and he's got like a boom box, and they're just cruising through this subway or airport, whatever it is, dancing and partying, while the Bitcoin people are all in their bow ties and their suit coats, talking about fixed monetary supply. And I thought, if I'm an average person, like which one of these things am I going to want to participate in? The party or the the library. So just about that time that I got convinced that like, oh man, I think there might actually be something here. I think that was when Doge stopped climbing or started crashing or who knows what. And then I actually kind of forgot about it, Gabe, and think until your podcast. And then it was maybe at $1 billion in market cap, which I thought was pretty interesting because I can't remember exactly back in 2014, but there weren't a whole lot of altcoins, so it's probably like Bitcoin, Litecoin, Namecoin, Dogecoin, and
they were top 6 coin in like 2014 for a month or two there.
Yeah, well, there weren't that many. There wasn't like 1,000 altcoins.
Yeah, there were just a few. But the interesting thing is like so Dogecoin dropped out of the top 10 or whatever, and so kind of dropped off my radar. But at the same time, it went from a value of like 90 million to like $1 billion. So it like 10x'd. And that was kind of interesting too, to like think like, oh, these coins don't really like die and go to zero. They kind of tend to grow and just get passed by other coins.
Well, I was definitely impressed talking to Ross with the Dogecoin dev guys. Of just something like they're doing serious work. They're doing all the same sort of diligence and focus and minute finding bugs and as all the other coins. But tune in for that on our next episode. And thanks, Usman and Dave. Appreciate you guys coming on.
Thank you.
Thanks, cousin Gabe.
All right, guys. Bye-bye.
Bye.
See ya.
Coloring Crypto. Subscribe now.